from gold and silver, commodities, stocks, long-term bonds, etc. Right now, everything is overvalued, and actually, commodity sector is the least overvalued. Okay, I think gold has maybe a 50% downside, maybe about 1100-ish from sell that damn thing now. It could go down 50 to 70%, and that's never happened. I'm very clear on this. The US dollar, if we have to work out a crisis here, in the crisis, the US dollar, I think, will go up one more time with this crisis. And you know what it's going to do? I think the whole rest for years and decades to come, it's going to slowly go down. In this next crash, it would be my lead. If I had to buy one thing in the next crash and one thing only, it would be Bitcoin.
Renowned economist Harry Dent predicts a significant market downturn, referring to the current financial climate as an everything bubble characterized by widespread overvaluation. In this context, Dent highlights gold and silver as relatively safer investments, with gold expected to dip before soaring to between $3,000 and $5,000 in the next boom. Silver, while less emphasized, is considered useful as emergency money. Dent also talks about the recent Bitcoin price breakout and identifies it as the epitome of the current bubble. Bitcoin is projected by Dent to potentially reach up to $1 million by 2035 to 2040, suggesting its future as a digital standard surpassing traditional safe havens like gold. Dent's analysis underscores the necessity for investor caution in the near term, while pointing to significant growth opportunities in both precious metals and digital currencies in the long run. Now we'll show you the best clips of Harry Dent's latest interview with Commodity Culture. Remember to subscribe and like this video, and check our pinned comment for some massive sign-up bonuses, as Bybit is giving you free $20 just for creating an account, so you can start owning Bitcoin today. Enjoy the video.
Look, an everything bubble means everything. There is no diversification that works that well, okay? It just evens you out a little bit. Everything goes down, you're going to lose all your gains for maybe even decades in just a couple years. That is worth giving up maybe another 5 or 10% upside in an already overstretched market for missing a 70, 80, 90% downside. And if I had to be in something, I would take gold over the rest of the commodity complex, because I think gold has maybe a 50% downside, maybe about 1100-ish from 2000-ish, but other commodities could go down much more. I say there's one investment, and when you're in a bubble burst, or what I call a deflationary downturn, and the only comp for that is the 1930s, okay, especially the early 30s. There's only one investment that shines. Hey, T-bills will preserve your wealth. Great. Treasury bonds, like 30-year and 10-year, they are locking in rates at 4.5% now. Remember how much they fell just recently? 0.4% on the 10-year. It's going to go negative very likely in this downturn. Those treasury bonds could literally, Jesse, the most conservative long-term investment on earth, U.S. backed, safest bonds in the world, could double in value or more in the next year or two. That is the secret. Gold is like, hey, if you got to diversify some, gold is the best of the commodities. If you got to be some in there, gold, I think, will still go down 50%. And then I would buy gold, because gold's future is not as an inflation hedge. We're not going to see inflation for as far as the eye see, because it's workforce growth, and baby boomers have entered all around the world, and there's going to be slow workforce growth everywhere, okay? Gold is going to go up because Indians love it. It's a show of wealth in the country that's going to do the same thing China did in the last 4 decades, since the early 80s. In the next 4, India is going to lead the boom, along with Southeast Asia, global boom, coming out of this downturn into about 2065, 67 before that matures. That's going to be where the action is. And of all the commodities in the world that Indians love, and I'd say Southeast Asian too, but particularly Indians, and I've been to India a lot, by the way, gold. So I would love to see gold go back to support around 900, 1100, and that I could see gold going to 3,000 to 5,000 in the next long-term boom, and there won't be many commodities that will beat that. I don't know why anybody wants to be the reserve currency. It just means your currency is overvalued, which means your exports are disfavored as a general rule, okay? But we've been that for a long time, and we've prospered despite it. I'm very clear on this. The U.S. dollar, if we have to work out a crisis here, in the crisis, and look at 2008, Treasury bonds of the U.S. and the U.S. dollar did nothing but go up into late 2008, and then they come down, okay? The U.S. dollar, I think, will go up one more time with this crisis, and you know what it's going to do? I think the whole rest for years and decades to come, it's going to slowly go down. We're no longer the dominant global leader. All the growth is going to be in Asia. We're going to grow in our tech sectors and to some degree, because we're the leading country in a dying developed world, okay? We're still the leading country. So our dollar will hold up best and go up. And then I think the dollar will be not the place to be long term.
On today's market recap, silver surge sparks speculation over potential super squeeze. Silver has recorded its largest gain in months, sparking plenty of excitement on social media and other investment platforms that the move may be the start of a prolonged price rally. Harry Dent highlights that silver is not Bitcoin, but while supply and demand fundamentals explain much of the move in Bitcoin, it's drawing along to suggest that has implications for the silver market. There's no halving of supply impending, while demand is largely reflective of trends in industrial and jewelry manufacturing. Harry Dent also talks about the gold rally, but the move in precious metals comes across as momentum rather than fundamentally driven, at least in the near term, meaning it could reverse just as fast as it started. Gold and the silver price have been surging in the last several trading days as markets expect the start of rate cuts, which is driving cash from bonds to commodities. Now we'll show you more clips, but first like, subscribe, and turn on notifications. Also, check our link in description for some massive sign-up bonuses. Enjoy the video.
It was the best standard. Remember, the world was material, okay, up until the last century. Everything was, cars at best, and steel, and iron ore, all this stuff. It's material world. Gold was the perfect standard. It's concentrated. It's valuable. It's durable. It's limited. Well, it's not now, okay? We need something, the best standard now, and I'm pretty darn clear on this. I wouldn't bet my life on it. I'm betting by the top of this next boom, 2037, that Bitcoin is going to become the global monetary standard. And you know what it's got to do to have is more than all the gold in the world and be able to be that and still grow with a digital world, which it is digital. It's going to have to worth $1 million plus a coin. I see that for Bitcoin. And I wouldn't buy Bitcoin now. I think I want to see what happens when stocks crash next, and wherever Bitcoin ends up in that, I would buy it and hold it for a long time. I'm hoping it gets as low as 3,000 to 4,000. If it just got back to its recent lows after going to 52 here, back to 16-ish, wherever it is in this next crash, it would be my lead. If I had to buy one thing in the next crash and one thing only, it would be Bitcoin. Go down, but not as much as stocks or other commodities. I would choose gold. That would be the best, because gold has that, hey, in a financial crisis, it's real money. Hey, silver does too, and I wouldn't mind having some bags. If I wanted emergency money and things really get bad for a couple months, I want bags of silver coins just for trading of things. I don't think they're going to get that wonky, but it is possible. I mean, I am, from my point of view, predicting the greatest financial crisis of our lifetimes, future and past. You would have to go back to the early 30s. And all central banks have been doing, Jesse, since the 2008 crash, which I predicted decades in advance, that we would top in 2007 with the baby boom, massive spending wave, and go into a long downturn from 2008 to 22, 23. Predicted that back in the mid 1980s when this boom was just starting, okay? So this is real, and so we have to basically, I'm hoping the economy now, because they've tightened too much, too fast, that the economy does go down enough for financial assets to collapse faster than the Fed can keep up with, wash out this financial asset bubble, wash out a lot of bad debts, and therefore maybe by 2025 sometime, later than normal, we should have been booming from 24 to 37. We'll see that millennial boom, and it will be on better foundations because we won't have all this financial assets that can't go up any higher because they're overvalued, and massive debts that have not been allowed to, restructure. Restructuring debts is everything. It's healthy. I was early in I was Bain and Company turning around Fortune 100 companies, got bored with them because they're so large, and started doing the same thing in California with small, high growth new ventures. When things would go bad, I could cut overheads and costs 5x in half the time. When I'm not, and so downturns are actually an opportunity, and we need this. We have what I'm going to call, my next book's going to be called The Last Great Boom in America, something like that. This is it. After the millennials, we got nothing. Okay, we're just like Europe and the other developing nations that have been peaking, and will actually, Southern Europe contract forever. East Asia, Japan, Korea, China contract forever. China's going to lose 40% of its population in the next 50 years, and it's supposed to be the next great thing. It's not, and it's already got 22% empty houses, enough to fill every urban migrant for the next 40 years until they're totally mature at 87%. China's done. India is the next big thing. Southeast Asia is the next big thing, and the U.S., especially in our tech sectors, the NASDAQ and stuff, is still the leader in the world for now, okay? And we have this millennial boom into 2037, and after that, it's going to be hard to recommend the U.S. as a long-term investment, but not now, and especially not in the tech sector. So there's plenty to do here. I still say the opportunity here, get out of the way, give it a year. 2024 is this pivotal year. Are they going to be able to stop this again and keep the bubble going a little longer? I say no. I think it's already starting to get ahead of them, but we'll know by the end of this year. We'll have a better picture by early 2025. And then if we see a major crash, which is the most likely scenario in my scenarios.
What do you think of today's episode? Do you agree with Harry Dent? Post in the comments section your price prediction for Bitcoin and silver for the end of 2024. And if you think this price breakout will be a massive squeeze. Thanks for your support, and watch this video right here because you'll love it. I see you on the other side.